Today, a ton of traders lost their accounts right at the open. But if you knew what you're looking for, the real move came just a little bit later. I'm Stephen J. Campbell. I trade the futures full time, and I've been doing it for years. This is the only channel on YouTube that'll show you all the trades you missed so you don't miss them again. So let's get to the charts. Now we start off as we start off on these videos, taking a look at what things looked right before the markets opened. Of course, we had a range that had taken place overnight and was holding pretty much all the way through this morning, midnight, and it kept hitting a level and hitting this same range all the way back into the early hours of yesterday evening. But today was a very important day. And although as traders, you shouldn't really trade the news, it's not that responsible, a lot of people were thinking about this. This, of course, is the FOMC decision by the Federal Reserve. This is something that moves markets in most cases. But in 2026, we have no idea what the Feds are going to do. They've already stipulated. We're not giving you any kind of foreshadowing like the last guy. But here's what happens on these charts on these days. Pay close attention. Because if the markets as a whole, the big investors that we just jump on the back to be successful futures traders at retail level, if they expect good news, the morning might start off with them pushing the price downwards so they can push it back up when they get their so-called good news. And today's good news is that it looks like they're not going to raise interest rates, at least for now. Let's take a look at what we set up on the market open and where your fake out was. So first of all, we have our levels set. We have our sticky 28,000 level that we talked about yesterday in yesterday's video. Pay close attention to that. And as we open up the market, we can see right here that we have a massive swing down that doesn't quite break the very bottom of where the range was overnight. You can see it tries to break it there too. And it's also between the 200 moving average and our other moving averages down here, not quite broken out yet. As the market plays out, it's very predictable. It goes right up to the 28,000 level and bounces back. And at this point, you know you're setting up an opening range type of day. The market by 6:15 hasn't picked a direction. It's not going up. It's not going down. So we're just going to simply sit and wait. Now, my students know that this is something that's very important to do. Just take your box and drag it over the high and low of whatever's happened in the first 15 minutes of the day and look for an entry that might peek its head out, pull back in for double confirmation and then pull downwards, or do it on the upside. Maybe it goes up, pokes its head back down like a gopher on the prairie, and then pokes its head back up and then makes a run for it. And zooming in right here, we have our poke our head out, but you can see it pokes out, comes back in just a little bit. And your safest entry on this chart was actually right here on the second exit from that box that you just drew. And we can see that giant entry that breaks everything to the downside and has so much energy that ain't nothing going to stop it. It's just going to continue to go down until it perfectly pings off of level at 667, a level which I teach people how to find, and my students knew what to look for if they had set it. And then it bounces right back up for a retrace. Long here for 4 positions at 927. 927 is when we've come right back up and kind of wiped out the move that goes down halfway. And then we can see we did the same breakout right here where we entered in at this exact level, go all the way down and got out right there. The trades in real time are being shown on the screen right now so you can see how they were going into the account. So a total of $2,800 or so today. But here's where you didn't see the traps. Because even if you didn't draw the opening range breakout box, you can still see that we're range bound. The opening range actually adhered almost perfectly to these 2 levels that we set, that we show you about in 1K a day. And it comes up and down and finally does break through the level. So in a way, it breaks through the level. And then watch how it adheres to the levels. We have it right here. Your trap was right here. When it broke through, you need to see if there would be a pullback. You could have made another entry point down here as well when it got to another level, shot through, pulled back, and then broke down again. As a matter of fact, the levels that we draw on these charts that we show people how to do are pretty bulletproof. Every level here existed, and every level had a resting point, and every level had a consolidation, and every level had a turnaround. And all you had to do in this case was play the red and blue game, where every single time a green bar came up and a red bar broke it, you click the button here, you click the button here, or you click the button right here, and you scalp your money and you get out of the markets and you walk away a happy trader. Curious to know how you did in the markets? Post up today what you're trading. Are you trading NQ, ES, YM, GC? Why do they call it YM? It's really the Dow Jones Industrial. My name is Stephen J. Campbell. Those are the trades you missed today, so you don't miss them in the future. Same setups happen every single day. If you want to know how I help you identify these setups, how I can show you how you can trade with up to 90% efficacy and have certainty to that level, then click on the link below. Get into 1K a day. There's a special price down there when you use the coupon code SJC. Come back tomorrow. We do these videos every single day that we trade the markets to show you all the things that you need to know. And with that, I will see you in the next video.